Hello everyone and welcome back to the sessions on financial reporting. Friends, in this class we are continuing with Ind AS 12, that is income taxes. This is the fourth lecture on income taxes. So in the previous class we have completed discussing all the concepts which were within Ind AS 12. This class is meant for taking up some important practice questions as I have mentioned on the screen as well. So let us just begin with some important questions. Let us begin with question number 11. Let us read this question. It says, determine the carrying amount and tax base of the following. Now there are 8 components given in the question, and for each one of these you are supposed to determine the carrying amount as well as the tax base. So instead of reading the whole content of these 8 different situations, I would rather take one at a time. So let us begin with the first one over here that talks as income of rupees 6,000 received in advance, taxable on receipt basis. So if you carefully observe, we are talking about an income of rupees 6,000 which has been received in advance. That means as per financial records, the revenue is not recognized, but the income has been received. That means the amount has been received. So that receipt will be recognized as a liability towards advance income. In simple words, in financial records, there will be a liability for this component which will have carrying amount of 6,000. So we can simply conclude that carrying amount of liability towards advance income as per financial records will be rupees 6,000. Now observe one thing, this income is taxable on receipt basis. That means as soon as the income would have been received, from the viewpoint of tax law, the income would have been already taxed. As a result, from income tax viewpoint, there is no liability that will be considered for the company. That means according to income tax law, the company does not have any liability. The income is already taxed as soon as it was received. That means as per tax law, there is no liability in this case. Therefore, the tax base of this advance income liability will be nil. So let me show you how to write up the answer for the same. In your answer, you first of all mention that carrying amount of liability towards advance income equals to rupees 6,000. As this income is taxable on receipt basis, it must have been taxed as soon as received. Therefore, as per tax records, there is no liability. Therefore, tax base of advance income in this case equals to nil. Now please take care of one thing. As in when I instruct you to write down the solution, you can just pause the video, note down the solution and again resume the video, because I will not be separately giving you additional time to note down the solutions. So as instructed, just pause the video, write it up and then you can resume the same. Alright friends, you would have finished writing this whole thing. Let us move ahead and take up the next point. Income of rupees 8,000 received in advance, taxable on accrual basis. So again we find that there is an income which is received in advance. So as per financial records, the revenue will not be recognized and the company would simply recognize a liability towards advance income. That means the carrying amount of a liability would be rupees 8,000. Now here, what is the difference as compared to the first part what we have dealt with? Here, income is taxable on accrual basis. So the income has been received but it has not been accrued. That means even as per tax law, this income has not been taxed yet. It will be taxed only when it will be accrued. As a result, because it has already been received as an advance, even taxing authorities would consider the tax base of a liability amounting to rupees 8,000. In simple way, you can also have a clear analysis this way, that income is always accounted for on accrual basis. You know, revenues are always recognized on accrual basis. If the income is also taxable on accrual basis, then the carrying amount and tax base will not have any difference. Carrying amount and tax base will be same. If carrying amount of the liability is rupees 8,000, even the tax base of the liability will be rupees 8,000. So let us see how to write up the answer for this part. In your answer, you just mentioned that carrying amount of liability towards advance income equals to rupees 8,000. As this income is taxable on accrual basis, it will be taxed only when it is accrued. Therefore, as per tax records, there is a liability towards advance income. Therefore, tax base of advance income equals to rupees 8,000. So please write up this explanation and then I take you to the next part. Alright friends, you would have finished writing this whole thing. Let us move ahead and deal with the third part, that is accrued income of rupees 12,600 taxable on receipt basis. Now please carefully understand this point. So there is an income which has been accrued, but it seems the income would not have been received yet. It will be received later on, and it will be even taxed later on because it will be taxed on receipt basis. That is the nature of income as stated in the question. So what we understand is, from the viewpoint of financial records, we find that there is an income which has been accrued and such income is yet to be received. So as per financial records, the revenue will be recognized and simultaneously a receivable in the form of an asset will also be recognized. That means there will be an asset recognized as a receivable, or you can say income accrued or income receivable. That receivable will be recognized as an asset. So we would say that the carrying amount of this asset will be rupees 12,600. Now, this income will be taxed only when it is received. That means as per tax law, there is no income that will be considered as of now. When the income will be received, it will be taxed. That means the tax base of this income will be nil. In other words, there will be no accrued income that will be as per tax law. In other words, there will be difference in financial records and tax base. The another simpler way to interpret this situation would be, this income is recognized on accrual basis, but it is taxed on receipt basis. That is where there will be difference in accounting records and tax base. So if accounting records indicates the carrying amount of this asset as rupees 12,600, as per tax law, the tax base will be nil. So let us see how to write up the answer for the same. In your answer, you first mention that carrying amount of the asset in the form of accrued income will be rupees 12,600. As this income is taxable on receipt basis, it will be taxed only when it is received. Therefore, no income is considered as per tax records. Therefore, tax base of accrued income in this case equals to nil. So please write up this whole thing and then I take you ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and deal with the fourth part. Accrued income of rupees 1,700 taxable on accrual basis. That means the income is accrued, not yet received, and it is taxable on accrual basis. Now based on what we have learned earlier, I would want you to think on this on your own, and I will provide you 20 seconds for you to think it out. Your time starts now. So let us see if you have correctly answered this question. Carrying amount of the asset in the form of accrued income is rupees 1,700. As this income is taxable on accrual basis, it would have been taxed when it got accrued. Therefore, income is already considered as per tax records, but it is yet to be received. Therefore, tax base of accrued income will be rupees 1700. You may simply also figure out by applying a different logic. That is, as per financial records, the income will be recognized on accrual basis. If it is also taxed on accrual basis, then as per accounting records and tax base, there will be no difference. So if there is a carrying amount of the asset in the form of accrued income as rupees 1700, even the tax base will be same, that is an asset of rupees 1700. So please write up this whole thing and then we shall move ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and take up the next part, that is fifth part. Outstanding expenses of rupees 42,000 deductible on actual payment basis. So it is clear that the expenses have been incurred but not yet paid because these are outstanding, but these will be deductible from the viewpoint of taxation only on actual payment basis. So let me see if you can again figure out the same thing, and like earlier, I will give you exactly 20 seconds to think and your time starts now. So let us see whether you could figure out the correct answer. So here what you will write as part of your answer, carrying amount of liability in the form of accrued expenses or outstanding expenses will be rupees 42,000. As this expense is deductible on actual payment basis, it will be considered only when it is paid. Therefore, as per tax records, there is no liability. Therefore, tax base of outstanding expenses in this case equals to nil. So please write up the answer and then I take you ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and deal with the next part. Outstanding expenses of rupees 5,000 deductible on accrual basis. So as usual, I will give you 20 seconds to think over it and let me see if you go correct. So your time starts now. Alright, so let us check whether you went correct with the answer. Carrying amount of liability in the form of accrued expenses or outstanding expenses will be rupees 5,000. This was similar to the previous situation. However, this time the expense is deductible on accrual basis, and as the expense has already been accrued, what will happen, you may just write, as this expense is deductible on accrual basis, it would have been considered already when it got accrued. Therefore, as per tax records, there is liability towards outstanding expenses. Therefore, tax base of outstanding expenses will be rupees 5,000. So please write up this answer and then we shall move ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and take up the next part, that is prepaid expenses of rupees 23,500 deductible on actual payment basis. Now friends, by now you know how to deal with situations like this already. So I'll straight away provide you with the answer. Carrying amount of asset in the form of prepaid expenses will be rupees 23,500. As this expense is deductible on actual payment basis, it would have been considered already when it was paid. Therefore, as per tax records, expense is considered and there is no asset. Therefore, tax base of prepaid expenses in this case equals to nil. So please write up the answer and then I take you ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and deal with the last part. that is prepaid expenses of rupees 23,500 deductible on accrual basis. So now the accounting part will be same as in the 7th case, but the taxation part will be little different. So the answer you would write will be having same effect of carrying amount. So you can write carrying amount of asset in the form of prepaid expenses will be rupees 23,500. As this expense is deductible on accrual basis, it will be considered only when it is accrued. Therefore, as per tax records, expense is not considered and there is an asset arising due to prepayment. Therefore, tax base of prepaid expenses in this case equals to rupees 23,500. So please write up this whole thing and that will be end of the solution.